Welcome to Asian Investors Network, where we help our community prosper and achieve their financial goals. Let's begin.
Thanks for joining us at our women's panel this evening. We have really exciting panelists that are joining us, Stella, Michelle, and Jess, who we totally appreciate joining us last minute, given one of our other panelists got sick. So we're really happy that this event could still come together. And I just wanted to get us all started by getting us acquainted with the panelists. So I wanted them to each introduce themselves. So maybe we could start with Michelle.
Everyone, my name is Michelle Ngo. I'm the owner and director of Lava Integrity Group. We're a real estate investing firm, and we do fix and flips, long-term rentals, Airbnbs, as well as participating in syndications. So I started this company about 4 years ago, and I'm really excited to be speaking on this panel with some amazing women.
Thank you. Stella, do you want to go next?
Yeah, sure. Hey, everyone. Super excited to be here today. I'm Stella. I'm the co-founder and CEO of Fractional. We are a full service marketplace for friends and investing communities to co-own real estate together. Started the company January of 2021, just closing out our Series A as well, and excited to share more about my founder and investing journey.
Okay, thank you. And then last but not least, Jess.
Hi everyone, I'm Jess. I'm a principal at NEA on our West Coast tech investing team. We're a venture capital fund that's been around for over 40 years now. Our last fund size was around $3.7 billion, and we invest in early and growth stage tech and healthcare businesses.
Wow, that is huge, a huge number. Okay, thank you all. Just to introduce myself, I'll be moderating tonight. I'm Amy He, and I'm currently a product manager at Google, but I'm also one of the moderators in Asian Investors Network. So I'm really excited to be able to ask a bunch of questions to these ladies. The purpose of the event tonight is to, one, inspire other investors to learn after their story and hear their story out and see what we can pick up for our own investing journeys. And then also these women are obviously experts in their industry. So we'll definitely have to dig into some of their outlooks on investing as we go into kind of like a back to or like return from COVID kind of world. So we'll dig into that as well. So the plan for tonight is really we have a couple of questions that we're going to ask them, and then we'll leave about 15 minutes at the end to open it up to everyone here to ask them questions that you might want to dig further into. And with that, maybe we start with a very basic, just how did you get started on your investing journey? How did you get to where you are today? I'll let any of you jump in to start.
Sure, I can kick it off. So I grew up in the Bay Area, and pretty much everybody talks about real estate here. And that was definitely true in my life growing up. So both my parents, they were engineers, but they also had this side hustle where they've been flipping houses in the Bay Area for the past decade. So spent a lot of my weekends, essentially being cheap family labor, helping my parents underwrite deals, going to Home Depot and all of that. So definitely had a really big impact in terms of how I thought about money, how I wanted to diversify my investments. I studied computer science at CMU, and then after coming back to the Bay Area, I joined this financial technologies company called Affirm, where we were, really helping consumers, expand on their buying power on a day-to-day basis with consumer lending. And that just really, gave me so much insight around how much money impacts people's lives. And I thought a lot more about, my real estate investing journey, wanting to get a jump start on that. And just, especially with housing and real estate ownership being so inaccessible, how do we break that down and make the barrier of entry a lot lower? And that at that time, one of my teammates at Affirm was also equally passionate about the idea. The two of us paired up, and we actually started looking at land together to see if we can, form a partnership and be able to jump onto something. So that was, us forming our own joint venture outside of, before we even had this idea about building Fractional in the startup. And that just, aligned and resonated with so many of our own family, friends, and coworkers. Like everybody came to us and said, they had thought about buying real estate with their trusted network at some point in their life because it was such an obvious answer, but nobody actually, went about and did it because they felt so overwhelmed with the whole process. I think I got muted on accident. But yeah, connected a lot of the dots together, and just thinking back into, a lot of the really powerful communities that we've been part of, like the Asian Investors Network or the Subtle Asian Real Estate Investment Network, and just really feeling like, we're stronger together as a community. And if we can really come together and be able to, have the ability to diversify our investments, go into something, sharing something together and taking advantage of, the shared and the we economy, that would be, a huge game changer in unlocking this asset class. And that's how we got started with building Fractional and what we've made it to be today.
Oh, that's awesome. Thanks for sharing that story. If those of you who haven't heard of it, fractional.app, is that right, Stella? Okay, company that Stella built from the ground up. So take a look at that. Cool. Jess or Michelle, want to go next on how you started your journey?
Yeah, I can go next. So I grew up in Irvine in Orange County. And so early on in my life, didn't have exposure to Silicon Valley, but always loved computers and building websites with my sister when I was young. So I was always really passionate about technology from a young age, and ended up going to Cal because I wanted to be closer to Silicon Valley where I knew technology was. And I also knew that Berkeley had a dedicated business program and also wanted to study business. And so that's kind of how I ended up at Cal. When I was there, I ended up doing a few internships at different tech startups. One of them was called Euclid Analytics, and it was an in-store retail analytics startup that was actually backed by NEA and one of my mentors here, coincidentally. And the following summer, did an internship at Uber when they were first valued at 25 billion. So it was really cool, I think, from a young age to see fast growing startups and the ups and downs that they go through. And from there, I started reading more about, they would send out every day in these Uber newsletters on where Uber was in the news. And so that's how I started reading more about the tech industry, and then discovered venture capital as the people who backed these businesses and supported these founders, and just got really curious, and then ended up finding a mentor at a different venture capital firm while I was in college who kind of introduced me to the business. And I thought it was really exciting, thought there could be nothing more exciting for me than thinking about where the technology industry is heading and getting to support and work with a lot of these different founders. And that's how I ended up deciding I wanted to pursue a career in venture capital. And out of college, I felt like I couldn't add a lot of value to these venture firms. And so I decided to go into technology investment banking in order to just build some sort of skill set, so that when I did enter venture capital, I could offer people some sort of skill set or just have a base of knowledge to work from. So actually initially didn't have any interest in finance at all. I was all on the tech side, but ended up having a great experience at Morgan Stanley for a few years. And then I've been at NEA for 4 years now. And initially in my earlier time here, split my time across consumer and enterprise and early stage and growth side. So started off as really full generalist, and over time have specialized more in enterprise software and fintech, and a little bit on the earlier stage side.
Wow. So you started in banking and then decided to go to VC to get more skills before bringing yourself to VC. Is that right?
Yeah, I think I never had planned to stay in investment banking. I used it as kind of a really good training program for the next step, and have no regrets on pursuing that path. I think it was an amazing learning experience, even though the hours were not the best.
Nice. I've heard the hours can be quite long. Glad you went through that. All right, Michelle, you're up. And also tell us where you're at, because I think your journey is kind of interesting too.
Sure. So I currently live in Hawaii, but I'm originally from the Bay Area. I've been living here for 3 months now, so I'm pretty new to the area, but I guess I'll show everyone on the call my background so you could see I'm in Oahu at the moment. So I'll tell you my investing story and kind of how I arrived here. But I grew up in the San Francisco Bay Area, and very much like Stella, my family also owned rental properties. But they were very involved in the rental properties. They did their own cleaning, their own management, collected rents, and I would help them sweep the floors and do all sorts of work. And I saw how hard they worked. And it was actually not something that I originally wanted to get into, because I saw how many long hours they put into things. And in considering my family's from China and they came with nothing, they really lived out the American dream by slowly building out their properties one by one, and starting from San Francisco, Chinatown, really built up this business. And so growing up, I always just assumed we were doing fine financially because I saw they were working pretty hard. And it wasn't until I was 21 at the time, finishing up my college graduate, and I was majoring in accounting and finance. I had an internship at Hitachi, been there for 3 years at the time, working in different roles in accounting and finance. Always knew I wanted to go into tech or some sort of consulting. And that was my career path at the moment. But when I got home and I was 21, I saw a foreclosure notice on our house. And that's when my whole world flipped upside down, because I was like, okay, what's happening? We're in financial trouble. We're going to lose the home that my family's been in for a couple of generations. I had grandparents living there. It was a big deal for us. So that's when I started to get involved in my family's business. And it was actually because my family members were dealing with mental health challenges, and they were no longer in a capacity to manage these properties, and even just, getting out of bed was difficult for them. So I started getting involved, and luckily I had, some sort of business background. I was able to apply what I learned from my internships and from school to help them. We went through a slew of problems. And concurrently, while I was just getting into my tech career and getting into consulting, at the same time, late at night, I was coming home from work and helping them with this business. So it was definitely a very challenging time for me personally, but we helped them through situations like probate, litigation, ton of foreclosures, 20 years of back taxes, conservatorship issues, you name it, we've probably been through it. And coming from zero experience in this real estate world and really jumping into it was such a great learning experience for me, but also very, very scary. But what it taught me looking back is, you don't have to know everything. There's going to be people that help you along the way. And the internet is your best friend. I literally went on Google and I Googled foreclosure because I didn't know what that meant at the time and how it would affect my family. So fast forward 10 years later, I helped my family out with this financial situation, and we finally got to a really good point financially where we were finally stable. We were able to save most of the properties, and I had been working in tech concurrently for 10 years, Hitachi, Data Systems, Anaplan, Workday. My last job was at Oracle, doing a lot of consulting, but realized that I wasn't passionate about it. It was more just a way of making money. And I did make pretty good money, but it wasn't something that I had heart in. So I kind of looked at my life and said, what do I really want to do? And because of my family's journey with mental illness and the challenges that we experienced, I always knew I just wanted to work in this industry, make an impact with mental health, but I didn't know how. And then I kind of looked at my trajectory in real estate and realized, hey, I think I can build some financial freedom for myself, given my experience and what I've been through. Let me just start a business and give it a try. So I quit my corporate job, started my company, Lava Integrity Group, began with rental properties, started with just doing webinars on Bigger Pockets, very simply reading books, did a bunch of coaching, and ultimately it's been about 4 years now that I've been investing, and we have grown to a portfolio of 30 properties nationwide, a combination of single family, multifamily, and Airbnbs. And what I really love about our mission is what we say is we invest with purpose. So we're proud to say that we've invested over $10,000 in donations towards mental health and Asian hate organizations. So we're really happy that we're able to use real estate as a means to contribute towards the communities that we care about and the more purposeful work of mental health and raising awareness towards Asian hate.
Wow, Michelle, you were really thrown in the deep end when you first got started, it sounds like. And I think that story is really amazing and just really powerful to see like you today being financially free. And maybe to touch on that a little bit more, I would love to like just kind of get personal with you all and hear, why do you personally invest? Maybe it's generational wealth, financial freedom, but I'd love to hear from any of you who have thoughts on like what are your goals when you seek investments, or how do you think about investments, and what are those goals?
I guess I'll start since I was sort of talking on that topic. I think for me, you know, the reason why I went into investing was because I wanted to be a part of a purpose that was bigger than me. And so, you know, I was doing really well in my job, my corporate job, but it was just about me. I was focused on myself, but I realized that I wanted to give back more and do something that was more heart-centered. And so my mission is more impacting those struggling with mental health. And this was pre-pandemic. And I feel like given what transpired during the pandemic, we need more and more focus on mental health because a lot of people struggled in the last couple of years. So it has been my focus right now to raise awareness around that topic. And what is really beautiful about investing and financial freedom is that it gives you the power to do what you want with your time and money. And that's the most important thing for me, is it enabled me to move to Hawaii and pursue my dreams of opening a wellness retreat out here. So that's actually what I'm focused on right now, given that I have the more flexibility and more time with this business.
Very nice. So we have quite a few entrepreneurs on this panelist, it sounds like. I'm curious if there's any challenges being an Asian and a female investor entrepreneur. Maybe Stella, you can kind of give us some insight into like raising money as a young female Asian entrepreneur boss lady. How's that been? Any challenges that you've had to overcome?
Yeah, I think there's definitely a lot of allies in the journey, but also a lot of just like innate challenges and hurdles that you have to fight through. So something that I've, felt is just having to prove myself and the company a lot more than, people of a similar role, but maybe, they're male. And I think it's like, you just have to realize that, like, I guess at the stage, like if the business is sound, like that is ultimately going to be the reason why you succeed. And like, if you can back yourself up, like that is the most powerful thing that you can ever do. Right. So I think like having that mental model really like helps you fight against a lot of the things that are against you because of like macro reasons that might be like harder to change within, a very short period of time. And then, really having those like allies in the journey who do believe in you for who you are and understand the business, and, having their support and having them as your rock. Those are definitely, really critical to give you like an opposite perspective, especially, if they come from a different background, that you can definitely rely on, and be able to like pick their brains to fight against whatever it is that you have to go through.
Yeah, that's great. Jess, do you also have any stories in like iBanking or VC world where it's very male dominated, I assume?
Yeah, both industries are, tech as a whole is already very male dominated, but you add this finance layer on top of that and it's even more male dominated. And so I would say I've found as a Asian female that you kind of have to fight some of the preconceptions that that Stella mentioned that are generalizations of Asians and females, and just be aware of that and have to kind of overcompensate in a few ways. And so as an example, I've had people tell me in my career that you should have more presence, but that's very kind of unspecific and not really helpful feedback. And then you go into why do they have that impression, or what have I actually done to make someone think that? And so people will say things like that, and it's tough because you just kind of have to deal with it. But as long as I find if I'm aware of these notions that people will have of myself, then I can talk a ton maybe to overcompensate and do certain things to make sure that I'm countering what their stereotype is in a way.
Have you ever felt like that was really unfair to you though? Because, it's just because you're Asian and a female, but you have to overcompensate for these things that maybe other people don't.
Yeah, there's definitely a lot of moments where you just think that's unfair and it sucks. And that's kind of the unfortunate society today. But I think what I've found positivity in is that I feel like you have special communities of people to relate to you, and you can leverage those even more than other people can. And so I feel like with a lot of other female investors, I almost automatically feel a closer bond to them. And we share a lot more vulnerable conversations than I do with a lot of other people. And so there's this unsaid agreement that we should all try to help each other more and lift each other up. So I've found a lot of positivity in that regard.
Definitely. I've always heard women should always empower women. And speaking of that, I'm actually curious. I know, Jess, you had a lot of mentors throughout college, and then Stella, you mentioned a lot about allyship. I'm curious if for the three of you, have you all thought more about how you pick your mentors, or what do you seek in a mentor that has helped you to become where you are today? Maybe say more if you select specific types of people that you think would be able to help you.
Yeah, I can jump on it first. I feel like for me, even when I think about my mentors, it's almost kind of like investments where I do have diversification in the types of mentors that I like to interact and get support from. So I definitely, want people who really relate to me, who can get like my perspective from where I'm coming from. But I also really appreciate folks that are very complimentary to me, like that could be from a skill set perspective or even like a personality perspective. Like sometimes I feel like, I might be like more down to earth, like I don't like conflict, but I also really do appreciate mentors that have, more aggressive of a personality. Then they really help me see, what is it I need to do? Like, how do I need to sound more straightforward or like to the point to get something done and like really, get something across the finish line. So I feel like that's been really, really helpful. And another thing is I do really appreciate it when people like fundamentally respect me as a person and as an entrepreneur. And there is, like you feel as, even though they're a mentor, you feel like you are an equal and you have the opportunity to even push back on their advice, be able to hear, what they have in relation to your pushback. So then it becomes more of like an intimate discussion and collaboration to see how you can grow as a person and how you can grow your business. And I found that interaction to be really, really powerful.
That does require a lot of confidence to push back on your mentor. So good for you. Jess or Michelle?
I think for me, I've naturally gravitated towards certain people here at NEA and also at Morgan Stanley. So for me, it was pretty organic, but I do agree with what Stella said around diversification, and that there's certain people that I talk to about my general development and how to be a better investor. But there's also people I talk to where they might not be a full-time investor at NEA, but they are one of my mentors, and I'm a lot more comfortable with telling them things about maybe politics or general dynamics or how to even manage my other mentors and build relationships with them. And so I think there's different purposes you go to for different people, but in general, it's come pretty naturally as to who I gravitate towards.
Nice. Michelle, do you have any like particular criteria you look for in mentors if you do seek mentors out?
Yeah, not particular criteria per se. Again, I would agree with the other ladies. It is about diversifying and figuring out which personalities are complementary to yours. But I think for me, I just wanted to share that in the beginning of my career, I was very afraid to ask for help. I wanted to show that I could prove myself, I could work hard, really do it on my own. And then I always had this dialogue in my head saying, you have nothing to offer. What can you offer this mentor, right? What are you going to give them if they're giving things to you? And I realized that was the wrong mentality, because it's a two-way street, right? While they can give you knowledge and experience, you have a lot to offer as well. You've gone down your own path, you have your own stories, and you can help them just as much as they can help you. So it's definitely a two-way street. And so don't be afraid to ask for help, because people are more than willing to help you.
That's really awesome advice.
Yeah, I would say one of the best pieces of advice that I wish I did earlier in my career was telling everyone what your goals are, because that allows people to help you. And early on, I knew what my goals were, but I didn't voice them because I tried to be just fitting into where everyone thought I should fit in. But it actually took people a long time to be like, what are your goals? And I wish I just voiced out earlier so people can help you, because most people have good intentions and they want to see you succeed too, but they don't know what you want, because they're not mind readers.
Yeah, definitely are mind readers. And I also do generally tend to notice that a lot of women are not as confident about sharing what they want because they don't want to be overly ambitious. But I think it only benefits us to share that goal. So other people market it for you. It's like, hey, Jess was looking for that, or Michelle was looking for that. Maybe they can think of you when something comes around. So I think that's really a really good point. Throughout all three of your answers, actually, I noticed that there was a lot about proving yourself, where Stella had to make sure she had all the data so that she can get funding, and then building skills by going to investment banking before going into VC from Jess, and then Michelle feeling like you had nothing to offer. So I feel like there's a kind of a theme here, and I was really curious, looking back now, would you have done anything different knowing that you do have something to offer? All three of you are experts in the industry, and there's obviously a lot of value in that. And so what would you have done differently in your career investing journeys, looking back?
I think I pulled the trigger a lot quicker than I used to now. And I think I've had a shift in my mindset where I just really tell myself not to have imposter syndrome, because I'm like, everyone probably also feels similarly, like they're just not showing it, just like how I'm also not showing it. So there's nothing to really worry about, just go get it. And especially if it's something that is a easily reversible or easily corrected or adjusted kind of decision, there's really no point in overthinking it or doubting your choice. Why not just go do it, see what happens, and worst case, you just fix it and do something else later. So I think it's just that mindset that I've seen shift in how I behave or how I make decisions, that's enabled me to just move a lot quicker.
How did you notice that shift, or was it an intentional shift that you wanted to make sure you're moving more quickly, or what made you change?
Yeah, it was an intentional shift. So it actually just clicked in my head when one day I was actually talking to the CTO of Affirm where I used to work, and we had a one-on-one, and I was just you have to think about so many things every day. The organization is also growing really quickly. How are you just arriving at these answers? And he literally told me that he doesn't always know, and a lot of times he doesn't know, but it's always better to do than to just mindlessly think. So I was just okay, let me try that too, and basically adopted that from then on.
That's awesome. Good to know. Everybody always has that musing face, and you're they probably know what they're talking about, but maybe not everyone does. So
right.
Good to know. Jess and Michelle, anything you guys would change looking back?
I guess mine is kind of related to that on the overthinking point. A lot of times if I was in a board meeting or a meeting with a different company, I think too much on like, is what I'm saying really thoughtful? And because of the feedback I got early in my career and having to kind of overcompensate in that way, now I just default to just saying whatever is on my mind, as long as I think it's decently thoughtful. And because, I've realized that people don't really like listen that intently to like every single word someone says in these scenarios. And so just trying to not to overthink about things in general, I think just makes life a lot easier. And so early on in my career, did a lot of that. And now it's just, take things as it goes and don't overthink things and just say what's on your mind.
Yeah, I would honestly echo the same thing as Jess and Stella. It's a confidence that I built over time where I'm no longer afraid to ask questions and not take no for an answer. But I wish I had done so earlier, because it wouldn't have made a difference. And had I been more confident then, I think it would have just, it influenced my decisions better and influenced the room better for them to see me in a different light. And so it's just something that I think you can develop within yourself, is just to be confident of speaking up, and people don't really care as much as you think they do.
I will continue my question about hardships. Would love to know if there was a time or some story where someone either told you no and you felt like it was because you're either a woman, or like gave you advice to like potentially dress differently, or any like very unique stories that you might want to share with the audience that, you felt like it was a specific challenge in your industry because you had to act a certain way. Perhaps on like construction sites, for example, if you need to go look at deals, or if you're meeting with a customer, you have to make sure you dress very professionally.
I'll start. I have a story about working on construction sites, actually. So in the beginning of my real estate career, I would visit my job sites where I'm running my projects, and I've got contractors on site. And oftentimes these job sites are not very safe. There's uneven ground, there's nails in the ground. You could twist your ankle easily. So I used to wear workout clothes or comfortable sneakers going to the job site. And what I found was I wasn't commanding respect from my crew. And that's a lesson that I had to learn, because I think as an Asian female, I'm shorter, I look younger. I just wasn't getting the respect I needed from these full crews that were all male. So once I started dressing the part, I would wear boots and more professional clothes to the job sites, I realized that there was actually a shift in the way that they were treating me, which is a little unfortunate, to be honest, because I wish I could wear, more comfortable clothes or anything that I would want to these job sites. But that is something that I notice, is it does actually matter in the way that you dress and the way that you appear to people. And sometimes it's just something psychological. Maybe they don't even notice the way that they're treating you, but it is about the impression that you're giving off, especially when you're the owner or you're running a project, and you need to give that impression to the crews and make sure that you have that level of respect.
Yeah, that unconscious bias is very real. Thanks for sharing.
Yeah,
Sure.
I think on my end, it's definitely been empowering to see things move forward, at least in like the founder and VC community. I think, part of it might be because there's more, female VCs like Jess or allies in that side of the world as well. But I think I felt this the most when one of my female founder friends, she said she went to like pitch meetings with like Hello Kitty backpack, because that's just like who she was. And she was able to, raise her round with really, really impressive tier 1 investors. And that's like what made me realize, it's like at the end of the day, like you want investors and allies who like you as a person and who believe in you as a founder, and not because like you wear or you don't wear Hello Kitty backpacks, right? Like if somebody didn't like you because you wore a Hello Kitty backpack, you probably don't want them to be on the board for your entire founder journey anyways. So that was like when it hit me where it's like, okay, like I just want people who believe in me, and it's important for me to feel comfortable enough to be authentic with the people that are going to be, so important and play a huge role in my life. And my focus should be, making the company, making our team feel empowered, and not like, spend so much time like thinking about like what I need to package myself as. So I feel like that's been really powerful, at least like as a founder, just seeing people be able to like make change from a higher level, that and seeing how we've been able to move forward on that.
That is such a great story. Maybe we should all wear our Hello Kitty backpacks next time we think about asking for raising money or investing and whatnot. That's awesome, Stella. Jess, any other comments?
Yeah, I really like that point, because a lot of what I said was around making sure you know what the preconceptions are and compensating for that. But I also love the thought of just being aware of what your own superpowers are and where you shine, and embracing those and leveraging those. And so for me, I think might never be the loudest person in the room, but I think I bond with people because I'm very empathetic and can resonate with them and can show empathy. And so just understanding what are your own best qualities and using those to shine above other people too.
Yeah, there's definitely strengths in everyone. So we have to really bring that out and help each other bring that out so that we inspire or empower each other. So I love that too. Okay, last question for all of you from me before I open up to the group. I wanted to hear, what is your guys' investment outlook now that the economic shifts are happening? I'm curious to hear in each of your industries what's kind of happening. Give us the insights.
I can go first. So on the venture side, we consider ourselves more early stage investors, although we do some growth rounds as well, and we have a growth fund now. But in general, we're being careful around the macro environment right now. I would say a lot of the later stage growth funds are already starting to pull back their investing a lot, given how the public market multiples have traded very, very lowly over the last few months. And so I know a lot of the late stage growth investors are starting to pull back on their investing side, potentially shifting to the earlier stage and just kind of managing their portfolios. And I think there have been a lot of fundraisers over the last year or 2 years that have been done at really high valuations with really low revenue. And I think those companies will take a while to grow into their valuation. So we might start to see some layoffs or down rounds, or for good companies, we're already starting to see extension rounds on the last round, where it's a flat price to the last round for people to get some additional runway extension. So for us, and I think what a lot of other of our peer firms are doing, is we've been going through our portfolio and making sure we understand how much cash each company has, and planning for different downside scenarios. And at each board meeting, we talk about different scenarios if we had to solve for different situations around what if you couldn't raise another round? Is there a path to profitability or being sustainable? And right now, all the different venture firms, the whole industry as a whole has been ahead of investing pace, as in rounds have been larger than ever and valuations have been larger than ever. So each fund generally in venture is supposed to last 3 years, and most funds have been investing far ahead of that pace. And so I think a lot of venture investors feel good about slowing down their investing pace over the next year or so, as the macro environment is still, no one knows where it's going to go in 6 months. But I think people's sense is that it'll probably get potentially worse before it gets better is the general sense, but no one knows at the same time. So we're just being cautious, and I think other people in the industry are being cautious too, around businesses that are capital intense or will take a long time to reach profitability in a downside scenario. But that being said, we haven't seen the impacts on the early stage market yet, as in rounds have still been getting done at pretty fair prices. And so I think what's happening on the growth side is going to stay, it's going to take a little bit of time to funnel into the early stage investing side.
Well, that was really helpful for my knowledge. I'm sure other people are going to follow up on questions for that, because the outlook is definitely kind of grim for some companies. But Michelle or Stella, in your world?
Yeah, I guess from a founder perspective, I mean, Jess sits on like the opposite side of the table than me. So I think, you know, before we were in an extreme founder friendly market, and I would definitely say it's a lot more neutral now. So as a founder, you know, we have to be a lot more like reflective and make sure, you know, we are operating at high efficiency and not, you know, raising for the sake of raising or hiring for the sake of hiring or anything like that. So that's definitely been, you know, a shift in mindset. And I guess segueing that a little bit into the real estate world, because we are, you know, helping people buy real estate. I have noticed people are more creative in terms of like how they are operating their asset class to, you know, adapt to, you know, interest rate changes, market changes, things like that. And then just being a lot more critical when it comes to underwriting as well. But there's still definitely, you know, a lot of ways to, you know, make your money worth and be able to deploy your capital and still be able to, you know, gain a lot of operating experience and get your returns. And yeah, I'll pass the baton over to Michelle, since I know she'll probably have a lot more to say in that realm.
Thanks, Stella. I'll just preface to say I don't have a crystal ball and I'm not able to anticipate the future, but I can kind of just give you my personal opinion, what I've been seeing with the market. I think as interest rates rise, we're just going to have to be more conservative in our approach. So when we underwrite deals, you got to make sure that it's a ballpark deal. And the nice thing is, you know, during this hot market, it was a seller's market. It was very competitive. You had to remove contingencies. You really had to get in there, get quick, move fast, throw money at deals in order to buy them. And as the inventory increases, interest rates go up, the market slows down a bit, you can have more leeway, a longer time frame to decide, is this a good deal or not? Really look at your numbers and underwrite carefully. And I think the key that both Jess and Stella have mentioned is being more careful, being more conservative in the way you assess your deals and your numbers. And so that would be my advice as well. And the great thing about real estate is it's cyclical, but also it's a generally safe investment, right? You're never gonna meet somebody that says, oh, I wish I didn't buy this property 10 years ago. So for the most part, real estate generally continues to appreciate at different speeds, at different rates, but it's still generally a safe investment to get into as long as you hold on to it long-term and you're able to maintain it through this cycle. So yeah, my advice would just be to be more careful and obviously look at more creative financing options as interest rates go up. I really love what Stella and Fractional offer is the ability to pool money with your friends and family, because that gives you so much more strength. You can override the banks, become your own funding, which is a really beautiful thing. So definitely look into Stella's company, see if you could do something there in terms of real estate.
Thank you all for those insights. I am going to open it up to the group for any questions. I did see one come through in the chat. Does anyone want to ask one live, or I can go to the chat while you all think? Oh, I saw a hand. Oh, Gary, go for it.
Yeah, I had a question for Jess. So VC sounds super, exciting. I personally work in tech, but I don't, I've never been part of VC, but I'm curious to know, what is it that excites you about VC? Is it getting the returns from, some particular exit, or is it growing and nurturing companies? What excites you there?
I think for me, it's my favorite part of the job is working with the founders in our portfolio, it is a lot more of a coach type role where you're not in the weeds on the business, but we have a really large portfolio, hundreds of companies. And so the amount of scenarios that we've seen that startups have gone through is a lot. And so there's advice that I think people on the investing side can give around patterns that we've seen in other portfolio companies and how the successful ones have grown and help founders in that way. But at the end of the day, we're not the ones. And you also don't want investors who jump in and try to operate the business, because that's really hard. But we try to be helpful how we can. We provide talent resources to our companies. So our job is also to build a network so that we can help funnel talent to our companies, the pattern recognition that I talked about, and just kind of, so sometimes founders just need someone to hear them out. And, sometimes we do mini therapy sessions. Like we do whatever we can to support our founders. And that's, to me, is the most rewarding part of the job. I would say second is generally learning about the different technologies that are coming into our world. We have some hard tech investments. We've had some very technical enterprise software investments. And so just being able to help companies bring new products into the world that people will enjoy or will help people's lives is, I think, also a rewarding thing to do. But I would say that it's not all. I think the media also pumps it as a super glamorous job. And I would also say it's not 100%, roses all the time. There's, like I said, we have hundreds of portfolio companies. There's always some companies going through rough times or fires to put out, and it can be unpredictable at times too. So definitely, for the right personality, it can be a great job.
Cool, thank you.
I mean, it's not like Shark Tank, Jess. I love that show. Okay, there's a chat question from Jocelyn. I think this might be directed towards Michelle, but feel free to chime in, anyone. If I am just getting started in investing and want to achieve financial freedom too, where should I start given the market is so bad right now?
I would say, the word bad is a little, it puts a lot of weight. But in any market, you can make money in a downturn, and you can make money when the market's really hot, right? A lot of investors actually make a lot of their wealth during a downturn. So I think I would focus this time on educating yourself on what sort of investments you can make during a downturn. And sort of in my example with real estate, it was very hot market. People were throwing money. They were offering offers way above asking, millions of dollars over asking, right? And so the market was really hot, and maybe those were not necessarily the best investments at the time, but people were very anxious. And so now that we're kind of slowing down and there's more inventory and more opportunities, now might be actually an even better time for a new investor to get into a market, because it's less competitive and there's more options, and you're able to bid less on these offers.
Definitely really great advice. Jocelyn says, thank you. Any other questions from the group? With tech stocks and crypto trading at a fraction of their value, how do you balance your investments between those versus real estate?
I think in general, I mean, this is a generic answer in a way, but diversification is always helpful. Whenever we think about our own portfolio construction, we split our fund around half in healthcare and half in tech. And tech tends to produce bigger returns, but it's also more volatile in terms of the ups and downs. We have a lot more zeros and a lot more $3 billion companies, whereas healthcare tends to be more stable returns. And so we see that as our LPs, as us being able to produce good returns at scale with that model. And then we also think about location diversification. There's tech in China has been hit pretty hard over the last few years, but we made sure that was a certain percentage of our portfolio. We're doing the same thing today with crypto and making sure that it doesn't end up being 90% of the investments that we make in a year. And so I think if you apply that to your own personal portfolio, it's helpful to think about it that way too, is making sure crypto is a certain percentage that you aim for, tech, other sectors and public equities, and then maybe also you add real estate or other alternative assets in there as well.
Great answer.
Yeah, I think another thing to think about is also like how much work do you want to put into your investment in terms of like your actual involvement. So that's also like a good thing to think about in terms of like diversifying the amount of work you have to put into certain investments too, and how that impacts your overall portfolio.
Stella, would you say that just tech stocks and crypto is generally like the less work and real estate is more work, or are you thinking about other investments that's also more work? Maybe
Yeah, I
elaborate
think
on that.
even in those like broad three categories, like there are like in each of those there are subcategories where one might require more work and one doesn't, and the returns are like different as well. So just depending on like what kind of work is more incentivizing to you, like maybe it's like you put more in that kind of work and less work in another type of asset. I feel like a lot of it is also just like doing more self-reflection on like, what's your own risk profile? Like, how do you want to work for that? And putting something together that's more like specialized and catered to your personal needs.
Yeah, definitely. I've heard a lot about making that start as your goal, like having a why, and then deciding like where you go from there, making it all very personal for yourself. So that makes sense. Any other questions from the group?
What's one piece of advice that's helped you most on your personal investing journey?
Sam coming at us with the hard generic questions. I think for me, like, I would go back to like being vocal about like asking for help. Like I feel like before I was always scared of like, even in real estate, like doing like Airbnb properties, for instance, because I'm like, oh my gosh, I've like never set this up before. Like this feels super overwhelming, etc. And you just like reach out to people who did it, and like everyone wants to help because everyone was there at some point. Like they want to give back to the community, and like that really like helps you jumpstart on something that seems like very daunting at first. So yeah, I feel like it's just having like more confidence and thinking that like there's always some way to get there. And if you're not afraid to ask, there's always going to be people that are willing to help you get there. So just taking advantage of that, I feel like will definitely get you farther than feeling overwhelmed or feeling scared about just a thought about doing something.
I think a piece of advice that's really helped me in starting a new career and my own business is don't be afraid to pay for coaching. So I think a lot of people are afraid of paying for coaching. It sounds like a lot of money, but the reality is you're going to get a mentor or a coach that's accessible to you all the time, and they're very willing to help you because you're paying for their time. And so you don't have to be afraid of asking questions or taking up their time, because there's some compensation there, and they're more than willing to be there to help you. And that advice has helped me dramatically. The exponential growth that I've received from being a part of a bunch of coaching programs has helped me so dramatically in both my business and personal growth that it's been a really good piece of advice.
I guess we have one last question. Maybe this one, Jess, you can take on. With climate change more and more evident around the world, and with profits sometimes at odds with the greater good, has this affected your investment choices?
In general, and I would say the industry as a general, I would say is paying attention to ESG a lot more. For example, in all of our investment memos, we have an ESG section where we talk about things that this company has in terms of environmental elements to highlight whether they're good or bad, governance elements, et cetera. And so we're paying more attention to it. Our LPs are paying more attention to it in terms of actual investments within climate change. We actually have a huge group of people, I would say maybe 10 or so people who are part of our climate change group. as in they're looking for new investments within climate change. I would say it's a hard sector to invest in today. We were investors in the first clean tech wave back in the 2000s, and a lot of firms lost a lot of money in that era investing in these sorts of hard technologies. So I think those technologies are a little bit tougher sometimes, but if we find a company that is addressing climate change and has a software-driven model that can scale capital efficiently, it's an area that a lot of people here, and I think broadly, are very, very, very interested in, given all the just tailwinds in the space of clearly climate change is happening, and we need to back people who are creating great companies and addressing that.
That's really good to hear. We're making an effort towards that because climate change is detrimental. All right. So with that, we are at time. And I think this was a really great conversation, at least for me, to be able to moderate and ask you all really, really awesome questions and just hearing from your experience. So with that, I just want to thank everyone else for joining. Hope that was really helpful for each of you. Again, Asians Investors Network. We host these events every few weeks on Wednesdays. So look forward to seeing you all at our next event. Cool. Thank you all. Have a good one. Bye.
Thank you so much.
Thank you so much.
Thank you.
Thank you.
Thank you for joining us today. If you'd like to stay up to date with us in the future, please subscribe to our YouTube channel, visit our website, and join our Facebook group.